Did you know that Cathie Wood just bought an insane amount of Tesla stock? Wood has always been known as a Tesla bull. It appears that no issue will be able to weaken Wood's support of the leading EV company. You definitely should not miss this info. Cathie Wood was selling some Tesla stock early in 2022, back when shares were trading between $300 and $350 apiece. Now she is buying it again. Cathie Wood, founder, CEO, and CIO of ARK Invest, remains bullish on Tesla. In fact, Wood has been one of the biggest Tesla bulls on Wall Street. The stock has been at or near the top holding in several exchange-traded funds run by Wood. However, it is worth noting that Wood sold Tesla shares several months ago when the stock was near its highs. Wood's trading has certainly been timely, buying back shares when the stock dipped and selling some off after it rose again. In fact, Wood bought another 66,190 Tesla shares around mid-October on top of the over 132,000 she bought earlier that month. ARK Invest's first purchase in October was made after Tesla reported a miss in deliveries in early October, when Tesla announced its delivery and production numbers through a press release. Wood's latest buy came after the stock fell following Tesla's Q3 report. For the long term, there aren't many who are as bullish on Tesla as Cathie Wood. The star investor expects the stock to be worth more than $1,500 by 2026. Currently, it is not even trading at 20% of that valuation. However, during the Q3 earnings call, Tesla CEO Elon Musk made a rather bold statement that his company could be worth more than Apple Inc. and Saudi Aramco combined. Apple's market cap is around $2.3 trillion, while Saudi Aramco's is around $2 trillion, which means Musk sees Tesla to be worth around $5 trillion. Experts believe that the following are the major reasons why Wood is buying a lot of Tesla shares and why you should too. First, Cathie Wood likes growth. As earlier mentioned, Wood's latest buy came after the stock sank following Tesla's Q3 report. Some analysts were focusing on the admission by management on the earnings call that it expects to come up short of the 50% growth goal for 2022 vehicle deliveries versus last year. However, Tesla still projects it will meet that goal for vehicle production. The difference will be due to shipping bottlenecks the company has been experiencing. In Q3, Tesla produced 22,000 more vehicles than it delivered due to those logistics issues. But those cars have buyers and aren't just going to inventory. Whether customers take ownership in one quarterly period versus another shouldn't matter to long-term investors. And it's not just production that is growing at a fast rate. Total revenue grew 56% year over year in Q3, and net income more than doubled. Next, Tesla's profitability remains strong. Another point of concern for some investors is how Tesla's profit margins will hold up as more automakers are venturing into the EV market. Automotive gross margins dropped 258 basis points year over year, which is not overly surprising as supply chain constraints and rising material and labor costs increase expenses for companies in the automotive sector. Still, Tesla's automotive gross margin held steady at 27.9% versus the prior quarter. This implies that the company is making up for added expenses, while Ford recently warned investors that it expects an extra $1 billion in inflation-related supplier costs. In Q3 alone, Tesla has raised prices on its products. Investors should take it as a good sign that those price hikes are helping and are also not sapping demand. Finally, Tesla benefits from contributions from other products. Tesla critics pointed out that the company has a limited product lineup that hasn't been updated for years. Still, the electric semi-truck will begin deliveries on December 1st to its first customer, PepsiCo, and Tesla CEO Elon Musk himself said that he will personally be there. The much-anticipated Cybertruck is also on the final lap, according to CEO Elon Musk, and should begin deliveries next year. Also, Tesla is expected to introduce a lower-priced EV soon that will expand its product line of passenger vehicles too. Musk also told investors the company is working as quickly as possible to increase battery production capacity. Its energy division also includes battery storage and solar rooftops and has more demand than it can supply. Sales from that division represented 5% of total revenue in Q3 as its energy storage deployments jumped 62% year over year. All of that should result in many years of growth coming from different places for Tesla. For what reasons is Tesla stock worth buying? First, Tesla sells cars like crazy. It's hard to argue with success. With a decade in, Tesla is selling cars as quickly as it can make them. In fact, it does not seem that demand is waning despite Tesla critics predicting so. Orders for the Tesla Semi and Cybertruck are overflowing even though it is not run out in the market yet. Next, Tesla is a diversified company. About 80% of Tesla's total revenue comes from its vehicles, but it's a diversified company that offers investors the opportunity to buy into an exciting range of new and emerging technologies with a single stock purchase. Tesla designs and manufactures its own battery systems and solar technology equipment, as well as supercharger stations, vehicle service centers, and self-driving software and hardware. In total, Musk estimates more than a dozen startups exist under the Tesla brand. Also, Tesla has big plans for the future. Tesla has recently opened new plants in Austin and Berlin, which significantly helped ramp up the production of Tesla vehicles. With a presence now in Germany, Tesla will be competing not only with America's top car companies, but also with the likes of Daimler AG, Volkswagen, and BMW in Europe. Moreover, Tesla's FSD, robotaxi, and humanoid robot Optimus are expected to have a breakthrough soon. Tesla's energy segment is also ramping up production. Its gigafactories haven't just increased battery production to support Tesla's vehicle manufacturing growth. The company has been increasing the production of battery storage and solar systems that it sells separately to customers. The EV company also recently filed documents saying it is evaluating the potential to build a lithium hydroxide refining facility on the Gulf Coast of Texas. That would be another way to streamline its supply chain and control costs. The company said commercial operations could begin by the fourth quarter of 2024 if the project moves forward. That could also help Tesla benefit from incentives included in the Inflation Reduction Act. The new law already gave Tesla a boost as it resumes some tax credits that had expired for customers buying new EVs. Tesla was well past the previous limitation that ended those credits after a manufacturer sold more than 200,000 vehicles. Lower-priced vehicle models and more of its supply chain based in the US will also help it meet eligibility requirements. Elon Musk's role as Tesla's CEO may be viewed as both an advantage and a disadvantage. Musk is arguably Tesla's life force. Musk's role in Tesla is like Steve Jobs was to Apple and Warren Buffett is to Berkshire Hathaway. However, Musk has recently been making a lot of moves that are causing concern for most investors. Still, the ride for shareholders seems to be smoothing out as the company meets quarter after quarter of profitability. That said, investors can't ignore Tesla's off-the-charts valuation multiples. Tesla has grown into the largest car company in the world and now sits comfortably atop the industry. If things continue to go Tesla's way, that's not likely to change anytime soon. And if history is any guide, betting against Musk tends to be a bad call. The future certainly looks bright for Tesla. While a PE above 70 is an extremely high valuation, if the company continues to grow at or near 50% for several more years, that won't seem so rich. For investors looking years or decades down the road, buying Tesla right now could make good sense. That said, the risks remain as Tesla is no longer the only EV company worth watching, and investors need to be prepared for the idea that its better established rivals may supplant Tesla's position. In short, investors with an interest in buying Tesla shares should add them to a well-diversified portfolio. Tesla, and the EV sector in general, is entering a new phase, and the company is positioning itself to continue to lead the way forward. While returns over the coming years may not match prior results, Tesla has a lot of irons in the fire. It's worth looking closely at whether now is a good time to invest. Overall, Cathie Wood remains more bullish than ever on Tesla stock. Wood, who is a huge proponent of innovation, continuously shows her support for Tesla and its forthcoming innovative projects. Make sure to subscribe to this channel for an insane amount of Tesla stock updates.